We welcome you on behalf of Prime Looks with a video to show you the stock market trends for the coming week, which is from Monday, March this week. The PSX performance during previous week, rather couple of weeks, saw negative trends because of a Pakistan economy being very badly handled by the people on the top. Much hyped countries investing in Pakistan seems a distance proposition uh, because the geopolitical situation calls for that. Collection of taxes is very poor as finance ministry has got no clue how to come up with innovations. FBR performances are similar, rather poorer than before. Inflation rate is touching highest level ever in Pakistan. The way the geopolitical situation has been handled is another minus point for the government. All the claims about Pulwama attack, retaliation by IEF in Balakot episode gave strength to Indian narrative rather than upholding Pakistan's point of view. Using F-16s and going into India for selective operation also gave quite a negative impression to an already strained relationship between India and Pakistan. With both sides irresponsible behavior of media worsened the situation, and at last India has come up with the proofs that Abhinandan had shot down Pakistan's F-16s before being hit by a missile. Pakistan, however, gained a moral victory here as far as they treated the downed pilot with respect and dignity. Although return of the pilot was highly persuaded by Saudi Arabia, since he has recently announced massive investment plan both in Pakistan and India. Imran Khan showed some vision here and returned the pilot at the earliest, despite some of the opposition's point of view on the other side. But Imran Khan looked over the shoulders and went on what he had decided, whether under pressure or whether under a strategy. This brought down the temperature and helped de-escalation as Modi's narrative also mellowed down. All this never worked in favor of Asian markets, and they kept looking with suspicion on the narratives of both sides. This led to market remaining in downtrends, and particularly for Pakistan, because Indian markets were showing a bit sign of improving as they believed that after this Pulwama attack and retaliation by India, Modi has got some upper edge. Geopolitical situation apart, Pakistan, if even gets a geopolitical situation calmed down, its economic indicators are no way supportive to a PSX. Another negative was brewing up for Pakistan stock market as India, in collaboration with other UN heavyweights, tried to put Pakistan on the list of FATF blacklist by first declaring Masood Azhar, chief of Jaish-e-Mohammed, as a big terrorist who was affiliated with Osama bin Laden earlier. But China has been instrumental in blocking Security Council verdict on Masood Azhar, as previously he had done in 3 attempts made by different countries to declare Masood Azhar as the global terrorist. But this time there were speculation that China may uphold the decision to avoid international backlash. This backlash could have given China a bad name as a terrorist supportive country, or supporting such countries which are beneficial in many ways to its strategic position. It was said that this was the only important country who was also facing terrorism in one of its own provinces, but was supporting Pakistan, not to be called a country which was exporting terrorism. To the dismay of India, China went one step ahead. China went ahead this time one step, and with a huge decision where it not only asked a question from the Security Council about the criteria according to which someone could be called a terrorist or not. It is an intricate matter and needs looking into through different perspective was the point of view of China. In a daunting blow to India, it questioned for the first time the situation prevailing in Kashmir also. Although this time move by China was highly criticized by the UNO, it left Masood Azhar out of the blue. It also helped Pakistan, who is to be observed and seen in that perspective, to be put on the FATF blacklist or not. This decision by China may lower its chances to be going from grey list to blacklist. If Pakistan remains on the grey list, its dealing with IMF will not be highly affected, which could solve some of the economic problems and woes of the country. Under this condition, PSX is not performing for consecutive weeks as could have been expected according to the geopolitical and economic situation, bringing in a very low sentiments in the market, which has plunged it around 38000 points. We have looked on the situation from all the angles, and we feel that this week would be no different than the earlier weeks, because refineries and cements were the most badly hit sectors, and refineries came under pressure after reports that the International Maritime Organization IMO will impose emission standards limiting the marine sectors for using furnace oil FO with a sulfur content of less than 0.5% from January 2020, hereby curbing the already weak demand for FO in the country. As a result, refineries were the most hit sectors, underperforming sectors, with the automobile assemblers, engineering and cements. As briefed in our earlier report, we had informed, rather we have emphasized and underlined that cement would underperform and remain under pressure as its export to India, which is almost about 47% of its total export, will be hit by India's decision to ban import from Pakistan, marking the sixth consecutive week to close in the red. The index settled at 38307 points at the end of the week. The week otherwise saw an average daily traded volume of 93 million shares, or at an average value of $2.7 million US dollars per day. So the technical indicators were also suffering because of this change as volumes went very low. Both textile and fertilizers, however, outperformed the KSE index and they saved the market going very low and at least get some support levels to remain range bound. The PSX was further hit by foreign net selling of 15.6 billion US dollars, with a significant portion of the selling witnessed in oil gas exploration. In easing up of tension between Pakistan and India, Kartarpur talks have given another step forward, which is somewhat good for the total economic scenario for both the countries. However, the market would move under these conditions, and the wise investors know how to work in such conditions. Staying long and building long positions will not help the case of investors, so the policy should remain to buy and sell on dips. The index is expected to revisit Friday's low, where a fall below will continue the downtrend with 38,000 points, around 38,000 points side. Anyway, any upside will can move to 39 above range. That would be perhaps upper target, because the RSI and MACD, the technical indicators have moved down, indicating a negative view. So we have to take care of this technical indicators showing this somewhat bad view of the market. Investor must take care to trade according to the technical indicators, as we have earlier briefed upon. The support and resistance are at 38,675 and 38. Under all said and done, even if the market goes to the upper level and breaks the resistance, the market is going to be on the side of a lackluster. So the investors are advised to remain cautious in their approach and stay safe in the market. Thank you for watching our videos. Please subscribe the channel and click the button, bell button, so that you could be getting our latest videos in time to be up with the latest developments. We hope you would like our videos, and we wish you good investments. Stay tuned with us. Thank you to be remaining with us, and happy investment.